Right, everyone, here we are with ticker symbol SRNE, Sorrento Therapeutics Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Sorrento has been in a downward trend, and it had a slight recovery after being in a very bearish trend for quite some time, for a couple of months, and it hit the lows all the way down here at 575, 580 range, and from that point forward it started to rise up. Now it has taken a different trajectory. It's actually on its way down now, and we've been in a very bearish run since October 13th, and also every time that this hits newer support levels, it kind of slightly levels off, and then all of a sudden the bears tear it down again, and you could see it through the behavior. And the bulls were able to break through the 50-day moving average only once, and that was on the 15th to the 16th. Now let's look at our new resistance and support levels, because they have slightly changed, and we're going to look at the lowest point here in this sideways direction, because it is slightly going in a sideways direction, level off, but there is a tug of war between the bulls and the bears. I mean, it's leveled off, but the bulls and the bears are there tugging a war back and forth, trying to bring this up and then tear it down and so forth. So right now it's at 790. The 50-day moving average is 850. As long as we're below 850, the bears are in control. The moment we cross it and we're above it, the bulls are in control. So for the bulls to even start heading that direction and working their way towards it, they need to break through the highest point of this peak, right, of this recovery here before the bears reappeared, and that's 818. This does not signify that the bulls have gained control. This is just a sense of direction of where this is going, and if this turns into a support, the bulls can pull away from that, get closer to the 50-day moving average, cross it, and end back up in bullish territory. So super important for the bulls to break through 818, turn that into a support, and start to hit newer highs. Now, if the bulls are able to do that, then their next goal would actually be breaking through this resistance level right here, and that is 851, 1 cent above the 50-day moving average, and that's 1 cent above the 50-day moving average, moving away from it in an upward direction, and the goal after that is to pull away and hit newer highs and newer resistance levels. But before getting there, or even breaking the 50-day moving average, the bulls need to break through 818, turn that into a support, and break away from it to hit new resistance levels and newer highs. On the other hand, we have our support. This support is 771. This is the lowest point reached in this bearish run. Lowest point reached in the bearish run, 771. If that gets broken through, I want to emphasize to all investors, pay very close attention to how the stock is reacting. Is it moving quickly to newer lows? Is it hanging out sideways, giving a chance for the bulls to reappear? Because if 771 gets broken through, we're already in bearish territory, and that's pulling it further away from the 50-day moving average, tearing this one down to newer lows and newer supports. Now, the bulls can try to reappear and bring this one back up, but they won't have a sense of rally or momentum until they break through 818. So if this was to fall and break through support, and the bulls decide to reappear anywhere in this area and bring it back up and kind of bring it in between the resistance and the support, that's a good sign for the bulls to actually level this off and stop it from hitting newer lows. But they need to continue that momentum to break through this resistance to then get to their true goal, which is breaking through 850 currently, which is the 50-day moving average, to get back into bullish territory. So I want to emphasize to all investors, pay very close attention to the behavior of this stock. Who's dominating the chart? How quickly is it hitting newer lows? Or are the bulls trying to reappear? If it breaks through 771, which is the lowest point in this bearish run, and also currently the support for tomorrow. As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community. Don't forget to click on the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. And don't forget to hit that like button to let me know you watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up and all the way to the last candlestick of the 6, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.